Welcome back to the channel. I'm Algabot, and today we're studying a MetaTrader 5 expert advisor called Regression R² trend. This is a trend-following approach with an unusual twist. Instead of reacting to a price level, an oscillator, or a channel touch, it measures how straight the recent path of price actually is, using a statistic called R² from a least squares regression line. In the next few minutes, you'll learn how it fits that line, how it judges trend quality, how it decides direction, and how it manages a trade with volatility-based stops and targets. Let's dig in. This is educational content only. Let's set the scene. Most trend systems ask a simple question: which way is price going? Regression R² trend asks a deeper one first. Before it cares about direction, it wants to know whether the recent path is even organized at all, or just random noise. To answer that, on every newly closed bar, it fits a straight regression line through the last 20 closing prices. That line is the best straight-line summary of where price has been traveling. Then it computes R², the coefficient of determination. R² runs from 0 to 1. A value near 0 means the closes scatter all around the line, so the market is choppy and undecided. A value near 1 means the closes hug the line tightly, so price is moving in a clean, well-defined straight path. In plain terms, R² answers how straight the recent move is, completely independent of whether it points up or down. The strategy's core idea is that the real edge lives in the transition. It doesn't want to enter a market that is already obviously trending, because by then much of the move may be behind us. Instead, it watches for the single bar where R² freshly climbs above a chosen threshold. That is the moment a market stops behaving randomly and organizes itself into a statistically clean line. Once that quality threshold is crossed, the regression slope tells it whether the clean line points up or down, and that decides long versus short. A separate check makes sure the fitted move is large enough relative to volatility, so a perfectly straight but almost flat line is screened out. Everything is measured in ATR units, the average true range, so the same settings adapt naturally across different instruments and time frames. Its natural home is liquid, trending markets such as major foreign exchange pairs or an index on the 15-minute to 1-hour charts, but nothing is hard-coded. This suits traders who enjoy studying statistical trend filtering rather than chasing every wiggle. Remember, trading involves risk, and losses do occur. Let's walk through the exact logic, step by step. On each newly closed bar, the EA fits an ordinary least squares line to the most recent 20 closes, and it does this twice. Once for the current window and once for the window that ended one bar earlier. From each fit, it reads 3 numbers: the slope, the R² value, and the endpoint, which is the fitted price at the newest bar. It also reads the average true range over 14 bars to gauge volatility. Now the entry test. First, the strategy detects a fresh quality cross. The previous window's R² must have been below the threshold of 0.55, and the current window's R² must be at or above it. That fresh crossing is the emergence signal, the bar where randomness gives way to structure. Second, the fitted move must be volatility significant. The EA multiplies the slope by 19, the span of the window, to get the total fitted rise, and it requires that rise to be at least one average true range in size. This screens out lines that are tidy but almost flat. Third, direction and confirmation. For a long, the slope must be positive and the closing price must sit above the regression endpoint, meaning price is leading the clean line upward. For a short, the mirror image, negative slope, and price closing below the endpoint. When a long fires, the EA buys, places its stop 2 average true ranges below the entry, and sets its target 3 average true ranges above, a reward to risk of 1.5 to 1. A short does the reverse. Position management goes beyond that fixed bracket. On every bar while a trade is open, the strategy checks 2 early exit conditions. If R² decays below the exit level of 0.25, the straight line has dissolved, the trend has lost its definition, and the position is closed. Alternatively, if R² is still strong but the slope has flipped against the open trade, that signals a genuine reversal rather than noise, and the trade is also closed. Only one position is held per magic number at a time, and new entries are skipped when the spread is wider than the allowed maximum, so trades are only taken in reasonable conditions. Let's read the meta-editor code on screen. At the top are the inputs. RegPeriod is 20. The number of closes the regression line is fitted to. R2 trigger is 0.55. The quality level the fresh cross must break above. R2 exit is 0.25, where a dissolving trend closes the trade. Slope ATR multiple is 1, the minimum fitted move in ATR units. Then the ATR period of 14, with stop and target multiples of 2 and 3. There's also a maximum spread filter, the order volume, and the magic number that tags the EA zone trades. Below the inputs, the fresh cross flag is true only when the previous R-squared was below the threshold and the current one is at or above it. The fitted rise is the slope multiplied by the window span, and the stop and target distances are simply ATR multiplied by their multipliers. Now the two signal blocks, and notice they are exact mirrors. In the long block, the code checks that the slope is positive and the closing price is above the regression endpoint. If so, it reads the ask price as the entry, sets the stop 2 ATR below and the target 3 ATR above, and calls trade.buy. In the short block, it checks that the slope is negative and the close is below the endpoint. It reads the bid price, places the stop 2 ATR above and the target 3 ATR below, then calls trade.sell. Same structure, opposite direction. Clean and symmetric. Let's walk through this illustration candle by candle. In the lower panel is our key indicator, the R-squared reading, which measures how cleanly price hugs the regression line. It runs from 0 to 1. The blue dashed line marks the trigger at 0.55, and the gray dashed line marks the exit at 0.25. Look at the first three candles. Price is drifting sideways, small bodies overlapping each other with no clear direction. Down in the panel, R-squared is sitting very low, around 0.1, deep in the red noise zone. The path here is essentially random, so the strategy stays flat and simply watches. Now the fourth candle, at index 3, changes everything. Price pushes up with a strong close, and crucially R-squared jumps from below 0.1 straight up through the 0.55 trigger. That is the fresh quality cross the strategy waits for, the exact bar where randomness gives way to a clean, well-defined line. The slope of that line is positive. The fitted move clears the volatility filter of one average true range, and the close is leading above the regression endpoint. All conditions line up, so the buy entry marker prints right here. The stop is placed 2 average true ranges below, and the target sits 3 average true ranges above, a reward to risk of 1.5 to 1. Watch what happens next. Candles 4, 5, and 6 each close higher in an orderly staircase, and R-squared climbs even further, towards 0.9, confirming the trend is getting straighter and stronger. On that sixth candle, price reaches the take-profit target, and the long trade is banked. Notice the strategy didn't need to chase. It entered as the structure emerged and rode the clean part of the move. After that, the picture changes again. On candles 7 and 8, price stalls near the highs and starts to roll over. In the panel, R-squared fades from its peak back down, and by candle 9 it has slipped toward the exit zone. The clean line has dissolved. The market is undecided once more, so the strategy simply waits for the next organized move. Then the mirror image sets up. On candle 10, price breaks lower with a decisive close, and R-squared freshly crosses back up through the 0.55 trigger. But this time the regression slope is negative. The clean line points down. The fitted fall clears the volatility filter, and the close is leading below the regression endpoint, so the sell entry marker prints. The stop goes 2 average true ranges above, the target 3 average true ranges below. From there, candles 11 and 12 close steadily lower in another tidy staircase. R-squared holds firm up near 0.9, and on candle 12, price reaches the downside take-profit target, and the short is banked. So across this whole sequence, the logic stayed identical for both sides. Wait in the noise, act on the fresh quality cross, let the slope choose direction, confirm with price leading the line, and manage the exit with volatility scaled brackets. That symmetry is the heart of regression, R-squared trend. So that's regression, R-squared trend. We saw how it fits a least squares line to the last 20 closes, how it uses R-squared to judge whether the recent path is a clean trend or just noise, and how it acts on the fresh moment quality crosses above the threshold. We covered the slope for direction, the ATR filter for significance, the price leads the line confirmation, and the volatility scaled stops, targets, and early exits. Remember, everything here is educational information only and not financial advice, a recommendation, or a solicitation. Trading carries real risk, and losses are part of it, so always study a strategy thoroughly and test it for yourself before drawing any conclusions. If you found this breakdown helpful, please like the video, leave a comment with the strategy you'd like analyzed next, and subscribe for more MetaTrader 5 walkthroughs. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.